Hello traders, hello everyone, and welcome to our new week ahead video for Forex Analytics, where I will walk you through a lot of different markets, different assets based on Elliott wave theory. As you know, that's a theory that tracks the market sentiment through the price action, through the repeatable patterns. So I think it's very useful analysis, at least for me, because it's also a combination of both sentiment and technical analysis. Okay, so Blake is away, and that's why I'm taking the stage and will do this analysis for you. So if you love the analysis, if you love the content and want more of those Elliott wave charts, then make sure to check this trial from Forex Analytics for $1 for 10-day access. Okay, so what's going on? Well, as you know, we have seen US dollar coming to the upside last week because Powell said that there will be most likely 1 or 2 more hikes still this year after the current post. So it looks like that maybe speculators were a bit too aggressive on the bullish side, so they made a step back, and with lower stocks we are seeing US dollar now again finding some support. But if you look here on a big picture, there's still ongoing consolidation, right? Because you are actually trapped between these big levels. On the lower side of this range we have 100 area, and then you have 106. So that's a consolidation. You can clearly see that this is a very sideways price action, while previously we had a very strong drop here. So in my opinion, sooner or later this weakness that we have experienced here at the end of 2022 will resume. Maybe this will come after a triangle in a wave 4, which is, by the way, a continuation pattern. So you could look for a break below 100 area, or maybe much more weakness could be seen if this was already a completed correction for wave 2 or wave B, and you will be headed much lower already after the current bounce. So no matter how I look at it, I see this as a corrective pose since February, and I think that more weakness here will be seen on the dollar index, especially in the second half of this year. Also keep in mind that during summer maybe trading conditions could be a little bit more tighter, and we could be seeing different flows and no real breakouts. Okay, overall I am bearish on the US dollar, but I just think that this consolidation maybe could take a little bit longer than we think. But sooner or later, as I said, I think that we could be headed below 100. So this obviously could come, especially if maybe Fed will disappoint and not going to hike on the next meeting, and maybe this pose will actually be stop rather than just a pose of the hiking cycle. So, and this obviously would make dollar very bearish across the board. On the opposite side of the dollar, we have obviously the euro. Euro here is, in my opinion, in uptrend. It's a very nice clear wave pattern here in impulsive fashion from that September lows, and I think that this move sooner or later will resume. Keep in mind that ECB is much more hawkish than the Fed, so I think that ECB has a lot more work to do to bring the inflation much lower, and obviously this could play an important role for potential break higher here on the euro. Now from an Elliott wave perspective, I think that this could obviously the similar story compared to dollar index, but opposite direction. We could be finishing this flat correction, and we can be immediately headed higher after this pullback is done, or maybe this is still going to be some kind of a triangle and that would be a very big wave 4, and we will see a push to the upside maybe after the summer. Okay, so again, just a sideways consolidation within uptrend. The important is to note that we have next week the inflation data from the Eurozone, and I think it's on Friday. So expectations are 5.7. The previous data was 6.1%. So if the data will come around the expectations, maybe this euro will just keep sideways. if we will see data coming much lower, then euro dollar could really be here trapped in a triangle, because then 107 even could come in play. But inflation, if will come, let's say around 6% or so, then I think that euro dollar will be ready to make a new leg to the upside. Now let's take a look on cable. Well, cable is definitely in bullish mode. As you know, Bank of England has a lot more work to do to bring the inflation down. They hiked by 50 basis points, but interestingly enough, we have seen cable moving to the downside. Let me show you here on this chart, moving to the downside despite this hike, despite this spike higher. So despite very hawkish Bank of England policy decision, still cable came back to the downside and is testing now some key support here around 1.27. So this movement, especially when you have this very hawkish decision and still the currency comes to the downside, it really tells you that dollar is in a strong recovery. But I still think that this is just a temporary reaction, and that next week when this settle after Powell words will now settle down a bit and we will have a new news flows, I think that this sentiment again could change and even resume into the bullish side of pound. So looking here from a technical perspective, I see this as a correction on the way up. So as I said, 126.88, 127 is very nice, very attractive support. And even here on a big chart, you can see that that was here a level from a year back actually, that we are now testing it as a potential support. So as long as we are below that level, I think that there is actually a room for more upside here into this fifth wave. If we see, let's say next week, a complete reversal and dollar will rally across the board and even finish the next week much higher than the current one, then I think that this fifth wave would be seen as a potentially finished. Now let's take a look on Aussie. So Aussie is but it broke this trend line resistance very nicely after bears were rejected here between 60 and 78.6%. So I still think that this was a very nice corrective pullback after this first 5-wave movement here from 2022 low. So I still think that this is a major low and that we could see much more upside, especially since we broke this trend line. But now obviously after this first extended move to the upside, these pullbacks are normal, and currently we are trying to test this trend line, potentially can become a very nice support after this breakout. So I would be looking for more upside here. Here on Aussie we have also CPI data next week, so if will come out worse than expected, expectations are 6.1, then Aussie dollar could still rally. Keep in mind that latest decision to lift rates by RBI was a very close call, so certainly these numbers will be very important. But it's not only the RBI and inflation data, it's also linked to China. As you know, China cut the lending rates in the past week to support their economy, but of course it may take time before their economy will really be back on track and before Aussie could even see some beneficials from this. So for now, still because of weak Chinese yuan, I think that Aussie dollar is copying this movement, but still it could be looking at some very nice supports here next week around 66.50. Keep in mind that also when looking at the Chinese yuan, I see it moving into potential resistance. We have the 78.6% not far away, and potentially we can even count 5 subways up within a wave C. So if this whole movement here from that low is really corrective, then we should see limited upside very soon. And if we see a reversal to the downside, keep in mind that then Aussie, in my opinion, could be in a very nice bounce to the upside. Okay, of course this is also not only Chinese yuan, Aussie and Chinese yuan also are driven and are linked to stocks, to risk on risk off flows, and gold obviously as well. So if we look firstly here on gold, we are seeing moving to the downside. Keep in mind that this move from that from that May highs is potentially in 5 waves, right? So we are seeing prices coming to the downside into very nice attractive support, but I'm not sure if this is really wave C of potential correction here back from April, mid-April, or maybe is this like one part of the higher degree bearish correction that will take this price even lower. But in either case, I think that this 1900 area is a very important key support, okay, because you have wave 5 that equals to wave 1 in that area, and more importantly you had this wedge coming out from a triangle. So always when you see market in a downtrend and then potentially more sideways price action in a triangle, then downtrend continuation, keep in mind that this triangle normally occurs prior to the final move within the higher degree trend. So this is the higher degree trend, this is then the final move, okay? So afterwards you can expect market to reverse, especially because after this sideways price action here, a lot of traders will try to play the breakout here, okay? When price is finally at the new lows, they will try to catch this new leg that is unfolding to the downside, but normally that's a little bit too late. Keep in mind that this movement is definitely looking much more tired here regarding the bears compared to the previous drops, right? So in my opinion, these bears could be running out of steam, and I would not be surprised if we see a reversal. And as I said, ASI could be looking at some support. Chinese yuan is also or I should say dollar Chinese yuan is also moving into some resistance. So if these markets will really respond from that levels, I think that gold will also see some positive movement here and potentially even rally. Now when it comes to trading, of course I will not jump into the long side just straight away, but if we would see, let's say, from a bounce from 1900 area in 5 waves, okay, like this, because these 5 wave movements are always important because they show you the direction of the current trend or of a changing trend. So if we will see this type of a price action, meaning strong move to the upside in clear 5 waves, then of course I would be looking for potential opportunities on the long side, okay? Also looking at the RSI divergence here, slight one for now, but still I think that it can be showing us that we are in the late stages of this current drop. But on the big picture, I still think that gold has room for more upside. But of course, it's all about the US yields. If the US yields would really sooner or later come to an end with the current rise, and if, of course, a lot depends what the Fed will do on the upcoming meetings. If the yields would really stop here, I think that that's going to be the next potential catalyst for a move to the upside here on gold, especially if maybe later this year or in 2024 we will see maybe even some unexpected cuts by the Fed. So this is something that we should definitely track very closely. Now looking at also at the silver, it's coming to the downside, also still in a higher degree corrective drop in my opinion. 2150 is a very big level. It's where wave C equals to wave A, and of course this could be much more significant if we will be able to count 5 subwaves down into that area. Okay, so once that will be the case, we will be looking for some kind of recovery, maybe just in a 3 waves, maybe even more. So in either case, I think that metals could be approaching some very, very interesting supports. Now let's take a look on Kiwi. So Kiwi, in my opinion, is showing a very nice clear bullish setup. So always when you see this very strong downtrend like we've been seeing here through most of 2022, and then a sharp reversal, and when you can count 5 waves up within this sharp recovery, then that's indication that market has most likely bottomed, but nothing moves in straight line. So after a pullback that should be made normally in 3 waves, you can expect more gains. And if you look now at this price action here, you can clearly see a very strong move. Strong moves are typically very nice impulses, okay? So because we have seen a very nice, potentially even trying to make some head and shoulders reversal pattern, I think that that's an impulse that will send us much higher after this current retracement that can already be counted in 3 waves, like an ABC movement. So I'm looking for more upside. So far we had a very nice bounce away from between 50 and 61% FIB, and we also moved quite nicely here in this pivot area for wave B. So this overlap could potentially suggest that we are already seeing a new short-term bottom here. Looking at the 4-hour chart, well, we have a very nice potentially 5 waves up here and now 3 wave retracement. So watch out for the supports next week. The first one already being retested actually at the 50%, but there you have the 61.8% a little bit lower at 0.610. So definitely this area should be very attractive, maybe for a new bounce. If we can recover here back towards 62, I think that we are going to see more upside here next week. Okay, so for now this potentially even bullish flag is still underway, and when we can manage to see a broken upper line, I think that that's when Kiwi could see much more upside. Now let's take a look also on dollar yen. So as you know, Japanese yen is in a strong sell-off, has been trading mostly to the downside through the past week, as Bank of Japan so far will stick to their current policy, not any kind of changes, but definitely they said that they are watching the F.A.C.E very closely. So if dollar yen will get closer to 150, there will be bets that will increase probably in favor of potential new intervention, and that's when we could potentially see a new change in flows here. Okay, but for now, strong US dollar, still US yields are holding the support, and this is obviously driving this dollar yen to the upside, obviously because Bank of Japan is not looking for any kind of a higher rate. And on the other hand, you have F.A.C.E, who is still looking for 1 or 2 more rate hikes. But still, as I said, we are seeing here, or probably Bank of Japan will become much more nervous when we will potentially approach again this very big level, 150. So that's when flows could change. And if you look here firstly on this chart, I'm looking at a very sharp reversal, seeing from 2022 highs, and currently we are tracking an ABC recovery. We already passed the 61.8%, so 78.6% is the next level that we should pay attention on. Definitely it's a very important FIB level where we could potentially slow down. What we should pay attention on is also Nikkei. Okay, keep in mind that Nikkei through most of the 2022 they were in different correlations because of different policies from Bank of Japan and F.A.C.E, and also stocks have their own sideways flows. But then when interventions from Bank of Japan stepped into the market, we have seen a strong sell-off on dollar yen. But then when stocks finally now move to the upside globally, we have seen also dollar yen trying to stabilize once again. And you can look very closely here, a positive correlation came back here at the start of the year, and then also here in March of this year. Okay, but notice what I see here at the top on Nikkei. Well, on Nikkei we are seeing a move out of a triangle. Okay, so as I said already earlier, normally when you see moves out of a triangle, they can be sharp or can be very strong because market has been collecting this power for potential breakout for some time. So it's not a surprise to see a very sharp breakout when this one occurs. But a lot of traders, speculators will become even more bullish and optimistic when you see this market moving significantly to the upside with an extended structure. And normally that's indication that if something is coming maybe too far and something is overcrowded, then we should be aware that maybe it's about to realize that this move can come to an end. Okay, so keep in mind that moves out of a triangle again occurs prior to the final move within the higher degree trend. So I think that this is potentially final move, maybe even some kind of a fifth wave, and we are definitely watching this triangle measurement potential resistance levels from where we could see some sell-off. Even last week we have already seen some sell-off here, so it will be important to track the developments next week, because obviously if Nikkei would come to the downside, maybe even dollar yen will also move move lower. Also, if you look here at Japanese yen futures, you can see that this is a very nice bullish reversal followed by ABC setback, and we can now count 5 subwaves within this wave C. So again, maybe we are very close to potential supports, okay? But maybe these upcoming moves will be decided by Bank of Japan policy decisions. Okay, now let's take a look also on crude oil. So crude oil it's been very choppy lately, but it has a very big swings here, so you have to be very careful if you're trading this one. But looking at the slightly bigger picture, I still think that this is a 5-wave drop, and we could be either already bottoming here around this $63-62 per barrel, or maybe we are going to see another push to the downside towards $60 before we are finally stabilizing. Notice that important should be this upper trend line of this current downward channel, okay? So far we are not breaking out yet, but if this spike here will hold from start of May, that's when we could see more gains if this trend line will be broken. So definitely keep an eye on this one. If we can pass the $73 and even maybe make a daily close above that level, I think that we could see more upside. But again, this will be not only crude oil story, it has a lot to do with stocks, risk on sentiment, and of course US dollar. US dollar, if we will continue to the downside, crude oil will much easier make this break to the upside. But even if we see a break lower, suddenly continuation down, I still think that sometime this year we will stabilize around this very important level here, $60 per barrel. And now let's take a look also on the S&P 500. So the S&P 500 most likely it's in a bullish mode here, clearly because this drop that we've been tracking over the most of 2022, I should say, has been made in 3 waves. So it's much easier always to stay in uptrend and label each chart in bullish mode if there's a 3-wave setback, because you want to stay with a higher degree trend, and most likely you will be right more often than not, right, in this with this kind of approach. So that's why we are looking either for an extended third leg to the upside. Either can be wave C that can still move to close to these all-time highs, or ideally even wave 3. But we are looking at some pullbacks right now that stepped in because of speculators changed their mood after this Powell testimony last week. So we are seeing price coming to the downside, but can be some temporary correction here. 43.30 is the first support. Deeper one would be at 4,200. Notice that VIX so far is still here at the lower side of this range. So it looks like the market is confident about the next potential rise, and that's why we could be looking for potential pullback, because we know that market does the opposite than the majority of crowd, right? Also, looking here at S&P 500 equal weighted ETF, actually, sometimes it's good to look at this data, because it will give you maybe just much more broader, clearer picture about this index and about the single stocks that are in this index, because sometimes the whole index can be driven just by a few very strong stocks. So it's very important to look and observe what's going on here. And you can see that we have a very nice ongoing triangle. In my opinion, that's, again, as I said already earlier in some of the sets that I covered, this can be very nice bullish triangle, because after all, we had previously here an uptrend, we are in sideways move, so again I'm expecting an uptrend. So triangle, it's a 5-wave pattern, A, B, C, D, and T. And if you look closely here, we can see waves A, B, C, wave D, and looks like that wave E here is still missing, or can be in play now. So I would not be surprised for wave E to show up here, because if you look closely here below, I have actually this PCC, it's a put call ratio, combination of both equities and indices. So what this index actually tells us is if maybe traders, speculators are hedging their portfolio through options with puts or with calls. If we have a lot of puts going on, then it means that most likely investors are worried that there will be more downside on the stock market. If we have a lot of calls, then it means that actually markets or investors are confident that there will be higher prices, and that's what they are betting on with calls on a higher prices on stocks. And you can see here that this put call ratio actually is coming to the downside. This is actually, by the way, it's the moving average. Okay, 21 moving average of the put call ratio data. Okay, so I just use this moving average because it's much easier to read. And if you look here closely, we are seeing calls increasing because put call ratio moving to the downside. So I think that there are a lot of calls suggesting that prices will continue higher on stocks. So that's what investors believe. But notice that we are now moving into some levels that we have seen here back in April. So clearly we are at some maybe just temporary oversold or overbought regarding the calls conditions. So that's maybe, again, if something is a little bit overcrowded, that's why we should be aware of pullback. So it makes sense maybe to see this wave E pullback now when calls are at some of these near-term extremes. Okay, so for much better play on the long side, maybe for much better long opportunity, could be when these puts will be at the extreme, at this upper side, because that's also when the stock market in general, or this equal weighted ETF, will probably be either in this wave E, okay, or maybe even wave C of a much more complex higher degree triangle here. But still, I'm seeing this as a correction within uptrend. Also, check out here the comparison of this current correction based in time compared to this one that we have seen back in from 2018 to 2020. Okay, so that was a new high here, all-time high, and then we had this ABC flat correction. So this took, that's by the way daily chart, it took 378 days to unfold. Okay, and currently you can see that we are very similarly approaching this figure, okay, this time length. So again, it could be very interesting that wave E is probably really in play, because as I said, it can be final leg of higher degree structure of this triangle. So it could be quite interesting maybe for a new continuation higher, but I'm not really sure if this will happen during summer. I think that maybe later in the summer, maybe August, September, that's when new flows, again, when traders will come back after vacations, that's when new flows could again try to cause this move to the upside. Also, new central banks policy decisions will most likely be decided then. Okay, so that's for the S&P 500. Also, I have Nasdaq here, by the way. The technology sector is very strong. Cryptos are in very strong recovery mode. So still looking at this wave structure, could be a very nice impulse. Now you're in wave 4 correction, now based on a wave 2 here of the same degree. It looks like that this correction could be a little bit deeper, more complex. So 38.2% is here around 14,450, and you have here 23.6%, the first support at 14,850. Okay, so these are the levels that we should track. Also keep an eye on the time of this correction, how long it will unfold. For now, it's not that long enough for me to say that wave 4 is coming to an end, but clearly I think that maybe at the start of the July, first half of the next month could be quite interesting for potential supports here. Okay, now let's take a look also on cryptos, right? Okay, so firstly we will look at here at some of the outflows. Okay, so here we have outflows of exchanges of cryptocurrencies going out from exchanges to private wallets. So some would see this, maybe when you first hear about it, you think, okay, that's bearish for cryptos, but actually it's not, because it means that if your client, investor, trader will transfer their coins from exchanges to private wallets, it means that there's a less chance that they will change their Bitcoin for something else, like for fiat currency or something, okay? So they will rather just hold it there on their private wallets, okay? So what recently has been going on is that actually there were a lot of outflows going on Binance, okay? So this was actually a positive read for cryptos in general, especially for Bitcoin, because Bitcoin is not listed on this list by Securities and Exchange Commission of these 46 cryptocurrencies that are not properly registered and should not be traded. And that's why we have seen most likely also some of the altcoins that were transferred and flowing into Bitcoin, and then also to private wallets. So that's why we are seeing some very nice and positive response here on Bitcoin. So I think that prices could see much more upside here, especially when the US dollar will resume the weakness. If we look here at Bitcoin, we are currently already testing this 2023 highs after a very nice push and break out of this downward channel and of this correction. So it looks like that we are in a new phase of a bullish run here, but keep in mind that this move to the upside can already be in 5 waves. So maybe there's a time for a new correction, especially since we reached this April high. So easy money, easy trend here is already gone, okay? Because this was a counter trend movement. We tracked with this with clients very closely. This was a counter trend movement, and this is a continuation that already raised this correction. So it looks like that there can be a new stage for a correction in the next week. However, the Ethereum, maybe it's a little bit better, because this one has made this very nice ABC pullback here. Now it's reversing. We are breaking this trend line. So this one also obviously should at some point reverse all the way back to this level from April, and maybe this will come after higher degree wave 2. So this one is also very nicely moving to the upside. It should stay in uptrend, but just be aware of a correction. Either wave 4 current deeper one could find the support maybe around 1800, or if we'll see a move to the upside, then watch out for this wave 2 for higher degree here that could still come back to this current range that we are tracking, that we are trading, okay? Traders, I hope that you enjoyed this video. If you're watching this on YouTube, please make sure to subscribe to our channel, to press a like, to leave us a commentary if you have any questions. And as I said at the start, if you like the analysis, make sure to check our services. You can get the access for 10 days for only $1. Okay, traders, enjoy your day, trade well. Bye.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.